Welcome to a short lecture on why corporate social responsibility matters for modern business. In this presentation, we'll explore how CSR moves beyond compliance into strategy, creating value for stakeholders, employees, and investors, and why integrating purpose into operations can shift CSR from a cost center into a driver of resilience and long-term growth. This slide shows how aligning business models with societal values becomes a competitive lever. By responding to climate needs, community equity, and stakeholder expectations, companies can attract ESG capital, recruit top talent, and build loyal customers, while strengthening market resilience and creating sustainable growth that turns responsible practices into measurable competitive advantage. Here we introduce a materiality assessment that prioritizes issues at the intersection of impact and risk. Focusing on topics that matter most to stakeholders and the business helps target strategic CSR initiatives that build brand equity, deliver cost savings, and create revenue opportunities, with the ultimate goal of addressing legitimate societal concerns while protecting long-term value. Strategic embedding means turning responsibility goals into operational practice through OKRs, capital allocation, and product design. By defining shared KPIs, prioritizing impact investments, and designing circular, ethically sourced products, organizations create a shared purpose that prevents siloed philanthropy, scales social impact alongside profit, and reinforces a consistent, purpose-driven narrative across the company. Optimizing the supply chain transforms CSR into strategic advantage by partnering with ethical suppliers, cutting emissions, and eliminating waste. These actions reduce long-term costs, mitigate regulatory risk, and enhance resilience, while delivering competitive differentiation and protecting margins through eco-efficiency, essentially converting sustainability improvements into both cost protection and growth opportunities. A workforce investment strategy rooted in CSR focuses on inclusive hiring, fair wages, and continuous upskilling. Those practices boost engagement and innovation, improve retention, and build an internal talent pipeline, which in turn reduces recruitment costs and strengthens market relevance by reflecting customer diversity and creating a culture that supports long-term organizational success. CSR strategic impact also drives talent attraction and revenue growth. Transparent impact reporting and ethical branding help recruit Gen Z and top talent, while prioritizing purpose as an employer brand reduces acquisition costs. Credible CSR can justify premium pricing, expand addressable markets, and lower customer acquisition costs, ultimately becoming a sustainable revenue driver and competitive differentiator. Responsible financing ties capital costs to measurable societal outcomes using tools like sustainability-linked loans and social bonds. By linking interest rates to impact metrics, companies integrate environmental and social targets into financial performance, which can lower borrowing costs, improve return on invested capital, and signal ESG credibility, enabling cheaper, growth-focused capital for scalable impact. Adopting global CSR frameworks such as GRI, SASB, and the SDGs standardizes how companies report emissions, diversity, and community investments. Standardized metrics satisfy investor disclosure expectations, make it easier to benchmark progress, identify gaps, and guide continuous improvement, ensuring CSR efforts remain transparent, comparable, and aligned with internationally recognized impact goals. Cultural embedding moves CSR beyond programs into everyday behavior by rewarding employee-led initiatives like volunteering, green ideas, and inclusion projects. This approach decentralizes responsibility, unleashes innovation, and creates a continuous improvement loop that scales social impact and revenue, while reinforcing a purpose-driven identity across all organizational levels for sustained change and alignment. Regenerative innovation focuses on net positive growth by restoring ecosystems and communities while creating strategic and financial advantages. By developing solutions that provide social and environmental benefit, companies can secure first-mover positioning, open new revenue streams, and prepare for evolving regulations that increasingly favor restoration and sustainable value creation over mere compliance. Radical transparency in CSR reporting means publishing audited ESG data, openly disclosing setbacks, and outlining corrective actions. That level of disclosure builds stakeholder trust, differentiates the company from greenwashers, and attracts long-term capital, turning CSR reporting into a strategic marketing and positioning tool that strengthens credibility and supports sustained competitive advantage.